What is your read on the impact if we get to a 20% corporate tax here in the U.S. and repatriation?
I think what will drive the response in China, indeed in other countries, is what impact it has on the US dollar and the cost of capital. Bear in mind, for example, that if the US tax reform package does increase the growth rate in the US economy, and we haven't yet here decided what the impact will be on growth, because it depends on what the details of the tax reform package will be. But if it does boost growth, obviously countries will get some benefit from that because exports will improve. But I think the risk for countries like China and other emerging markets is that if the tax reform package were to raise the dollar and push bond yields higher, it could lead to some sort of capital outflows. And we suspect that the way China will deal with this will be through the normal channels of potentially tightening monetary policy, intervening in the exchange markets, potentially leaving capital controls in place a bit longer, rather than actually changing fiscal policy. There is talk, of course, of a quote-unquote tax war between China and the US, but we think that's very overplayed, and we would expect to see more normal monetary policy responses if the dollar were to go higher and yields go higher, which we frankly think is not a done deal by any means anyway. So I think there's a lot of things that could happen going forward before we saw a major Chinese fiscal response, for example.
So, Jeff, if I'm a Republican sitting on Capitol Hill right now, everything you say is music to my ears, isn't it? Because I've been saying the problem with our tax code is we're not competitive in the world, we're not attracting capital, we're not attracting investment, and here the Chinese are really worried that we'll get more competitive with them.
We actually don't believe the Chinese government is particularly concerned about this. There is a group in China, a lobby group in China, that is asking for some sort of response like this. But this is far from being Chinese policy. And yes, sure, we would understand that if the corporate tax rate were to go down to 22%, it may well boost investment at the margin. It may well make the USA a more interesting place to invest. But all of this still depends on what it does for the growth rate of the US economy, and therefore what it does for the dollar and what it does for bond yields. And so a lot of this, I think, is going to be driven by what the capital flow response to the tax reform will be. Now, in a report we put out today, we made the point that although you've seen another pretty fat rotation from EM into DM equities, particularly US equities, over the last couple of weeks, the dollar and US bonds have basically moved very little. What is that telling us? That could be telling us people are not sure still that tax reform will pass, but it could more realistically be telling us you're not going to get a lot of growth impact from the tax reform package.
Yeah.
And if you don't get much growth impact, the Chinese are not going to respond particularly.